Everyone right now is just panicking about these Trump tariffs. But what if they might actually fix the housing market? What if? You got mainstream headlines, they're screaming rising costs and builder uncertainty and a market slowdown. But what if underneath all this chaos, there is a shift happening, one that could reshape real estate for the better? What if? So the real question is, will the next generation of American families ever be able to afford a home? With prices still going crazy and inventory tight, especially here in Philly and the burbs, these tariffs might be exactly the shakeup that we need. So are working families ever going to get their shot at home ownership again? And stay with me because I'm going to go through this whole thing. And at the end, I'm going to explain 3 case studies of impacts that the tariffs have already had on housing. Let's get to it. So first, I want to just cut through some of the noise here. I want to talk about what's actually happening. Now we have President Trump's April executive order made reciprocal tariffs official, and then the market freaked out, as usual. But here's what they're not telling you, that Trump understands real estate better than any other president we've ever had. So in this article that I read, a gentleman from the BH Group, Isaac, he said that I agree with the President Trump because he's a smart businessman. He's a former developer. His family is heavily invested in real estate. I don't believe he wants to bring a catastrophe to the United States or to the real estate market. Now, we do have a 90-day pause right now, which gives us time to prepare and position ourselves correctly. Yes, I think there'll be a short-term pain for some right now, but the long-term gain for the housing market as a whole is going to be huge. But like everything else and every other topic, we have to look at the facts because we do have experts that are divided and have opinions that are different. Yes, industry experts are totally split on how these tariffs will impact real estate. I've got Derek Barker from Nectar. He's saying here in his article that he's worried about rising costs in an already tight market. He's concerned that input costs are going up in an environment where there's already been going up. It's already going up, he's saying. But on the flip side, you've got Cardano, who believes developments won't be affected in any meaningful way. He's still closing $200 million in transactions in the next 90 days. So who's right? See, I think they both have valid points, but I really think they're missing this bigger picture. So what's the bigger picture? I think in the immediate future, yes, we're looking at some disruption. Disruption is good. Some builders are stockpiling materials and wood, concrete, glass, anything important that might get hit with tariffs. Yes, that's happening right now, guys, all right? And mortgage rates, yes, they jumped back to about 7 after a brief dip, but I think they're between 6.5 to 7. It keeps going back and forth a little bit. Some investors are really getting nervous. That's normal, right? That's normal in any change, but here's what I call them, the doom and gloomers, the mainstream media, that aren't telling you that the temporary pain, this pain is temporary, and it's exactly what creates opportunity for savvy investors like you all. Are you a savvy investor? Do you want to be a savvy investor? A savvy investor would look at the long-term benefits, because I think that's where things really get interesting. Tariffs, they're going to reshape supply chains and kickstart domestic manufacturing. It's a fact. And when we start producing more building materials here, right here in the United States, a few things start to happen. We create American jobs, good paying construction jobs, manufacturing jobs, and we reduce dependence on foreign supply chains that have proved unreliable during the pandemic, totally unreliable. Also, we get more consistent pricing without the wild swings of global shipping and foreign currency fluctuations. And also, we develop new technologies and efficiencies to compete with the other companies. But the initial cost increase will stabilize as American production ramps up. Within the next 12 to 18 months, I predict we'll see more reliable supply chains and potentially even lower costs as domestic competition increases. That's the idea, you have to have competition. These global markets have been raking us over for years. It's time for us, as Americans, to take back our economy. Now, I know you all might not agree with me, but I'm going to keep going here because I think this helps housing affordability. So let me talk about that. That's what I call it the elephant in the room. It's called affordability. So how does this help then Americans, regular Americans, buy homes? The short answer, I'm sure you do, is stability, and it helps with predictability. People love stability, they love predictability. And one of, I think, the biggest challenges in the housing market right now is uncertainty. Buyers are telling me every day, I'm not sure what's going to happen. I don't know if I should buy a house. They're uncertain. Builders, they don't know what materials will cost in 6 months, so they hedge by raising prices or delaying projects, these new construction projects. And then you have domestic supply chain. That uncertainty goes down dramatically because then builders can plan better and finance better and ultimately deliver more units to market. My family are builders, and that's what we do. And I know it's holding up some of our construction right now, some of our developments. Plus, we have American-made materials that tend to be higher quality with better warranty support. That means homes that last longer and cost less to maintain. I think that's a huge factor that no one's talking about, a huge factor in a real true affordability that nobody's talking about right now. So where should you be looking to invest right now with all this craziness happening? Let me give you some specific areas to consider. Now, in this article, the gentleman Barker, he mentioned that properties that are already renovated, that have new systems, that have new appliances, they'll weather the storm better. Why? Because they have the materials before any tariff impacts. So maybe you should be investing in properties that are currently have listed right now. Just get these properties before anything goes up. But there's other areas. How about manufacturing bulk cities? Pittsburgh, Cleveland, Detroit. Manufacturing could make a comeback. That's what we're all planning for. With domestic production potentially ramping up, these areas might see some job growth and increased housing demand. And that doesn't happen overnight, so all these things could happen. You've got Raleigh-Durham's boosting the market, Austin, and Nashville. They combine affordable living with growing sectors. And you also think about the logistic hubs as well. So as supply chains then reconfigure, cities with major distribution infrastructure, you got Indianapolis, Memphis, and Louisville, they could all benefit. Also target properties at specific price points maybe. Look for properties below median price in your target market. These properties typically have the most room for appreciation and strong rental demand. Very important. And then you have Florida. I mean, so many videos about prices are going down and things are horrible are happening, but it actually continues to be a strong market despite all this stuff going on. In the article, it says that Florida is not going to disappear, right? The momentum there is likely to continue regardless of the short-term tariff impacts. It also says that the smart money continues to come to South Florida, and obviously people understand that Florida is not going to disappear. Okay, it's just not going to. That's where our president lives. He's not going to let that happen. Short term, we might have this little roller coaster, and some more people then will be more concerned. But overall, they think that that strong momentum that we enjoy here in the state of Florida will last 6-7 years, and it's just going to continue. That's what they're saying in this article. And I've seen it. I was down in Florida. I go every year for a couple weeks, and it's booming down there, and people are just moving in like droves. There's so many people in Florida. It's crazy. And there's some areas in Florida that say Port St. Lucie above West Palm, it's just exploding with construction. So the other day, someone asked me, what about the Federal Reserve factor, Diane? So how does the Fed play into all this? Well, some people, they expect them to lower rates if tariffs cause economic pain. But I don't think that's likely, but not guaranteed. So if rates do come down, that will support commercial real estate prices and potentially offset some of the tariff-related cost increases in residential construction. But remember, as it states in this article, I love this part, it said that Fed rate cuts would just be a Band-Aid, right? Just a Band-Aid. The real solution is rebuilding our domestic manufacturing base, which is exactly what these tariffs aim to do. So I'm all for this. I'm sorry if you're not. Sorry, not sorry, but this is where I'm going. What are some of the ways to position yourself to win in this new environment? Well, first, you can get more balanced portfolio strategy. That's what I like to do. Allocate your real estate investments across stabilized properties with existing cash flow, value-add properties where you can force appreciation through renovations, and development, such in like high-growth markets. It's a balanced approach. It hedges against tariff uncertainties while also capitalizes on opportunities. So I like that approach the best. If you're into material or forward acquisitions, say if you're renovating properties, considering buying materials now and stockpiling key materials before any potential price increase could save you a lot on total renovation costs over the next year. I would say the third thing you can do is build relationships with suppliers, with domestic supplier relationships. Start building these relationships with American manufacturers now. Companies like USG, who does drywall, or Mohawk flooring and Moscow fixtures, could be scaling up production. Each partnership deals might get you a better pricing than waiting. And another thing is debt optimizations with potential rate volatility. Consider structuring your debt with rate caps, or maybe look at fixed options. And there's so many different loan products out there. Find one that gives you the best combination of protection and also the cash flow. Really important. How about the 1031 exchange timing? If you're considering a 1031 exchange, the current 90-day tariff pause, this might be your window. It could be a great time for you to identify replacement properties. Great time. The smart money isn't running away. It's executing these strategies to capitalize on the coming changes. That's what you want to be doing. Okay, now what you've been waiting for is case studies. And don't forget to like and subscribe if you like kind of things I talk about. I have some real deal stuff here. So case studies. Here's what I said at the end. I would give you some case studies of what I'm seeing. So the first case study, I call it the American-made developer. I know a builder in Michigan who's already switching to all American-made products. Already, yes, all materials American-made. His costs are up in the short term, but he's getting priority treatment from other suppliers. He's getting better warranty support, and his customers, they love the Made in USA angle. He's actually increased his margins despite the higher costs by marketing his American-built approach. This model for your investment here, it's definitely clear. It's totally clear. It's happening. He called the American Premium strategy. We call it that. It can offset higher input costs if properly marketed to the right buyers who value domestically sourced materials. Okay? What do you think about that one? The second one, I'm going to call this the manufacturing hub investor. It's an investor that I work with in Tennessee, and he's specifically targeting communities near new manufacturing facilities. Great idea. As the plants are now ramping up production to meet domestic demand, they're hiring workers who need housing, and they see rental demand increase and property values rising in those areas. A great thing to look for areas like that where you can buy properties and then rent them out. What about that? Third case study is, I call it the domestic supply chain play. A commercial investor that I advise, and my husband and I advise, purchase warehouses near domestic building material manufacturing plants. Great idea. As the increase in domestic production, these facilities are becoming more valuable, and they've been able to increase rents as demand for storage and distribution space just grows. It's a clear blueprint. You can follow the domestic supply chain development. Properties near manufacturing facilities are showing stronger appreciation than in other areas. It's happening. Look for it. Keep those 3 case studies in mind when you're investing with these properties. So what's the conclusion here? What's the bottom line? Trump tariffs, yes, they're shaking up everything, definitely the housing market, but with the right strategy, it could be a massive opportunity. I don't think it's a disaster, You've got builders and buyers and investors. The smart ones, they're not panicking. They're positioning. So get positioned right now. Here's the thing, because even the best strategy falls apart if you're working with the wrong people. So if you want to capitalize on the shifting market, you need a realtor who understands how to make you money, not just open doors. If you're not in Philadelphia, in the burbs, that's where I am, a top producing realtor here. And if you're not in my area, I can introduce you to a realtor in your area who can give you this real deal advice. And also, I would check out my next video, how to find a realtor who will actually make you money. I break down exactly what to look for, what to ask, and how to find someone who actually thinks like an investor. You want them to think like an investor. Trust me, it's a game changer. Watch it now.